Good evening, everyone. So, welcome to session 5 of our We Start program dedicated to empowering women entrepreneurs. So, today's session is all about mastering startup finance, a critical aspect of building a successful business. So, despite the late hour, I'm thrilled to see many of you here ready to delve into the world of startup finance. So, we have the privilege of having Tamanna Singh as our speaker today. She is a founder of Menoveda, India's first menopause only brand, and also a mentor at Mahila Money, which is a full stack financial products and services platform for women in India. So Mahila Money actually specializes in offering loans to women who want to set up or grow their own business along with resources and community to achieve their financial goals. So in addition to her work with Menovida, Tamanna is also an investor and also an entrepreneur with over 20 years of experiences in building and scaling business in luxury and wellness segment. And also, she's a managing director of Uberlex Group. So, throughout today's session, we'll be covering essential topics such as financial management, metrics, budget, unit economics, and understanding financial statements. So, these topics are key for an entrepreneur looking to navigate the financial landscape of their startup. So, Tamanna will be guiding us through each topic, providing valuable insights and practical tips along the way. So, we encourage you to actively participate by asking questions and also sharing your experiences. Thank you for joining us today. And without any further delay, let's welcome Tamanna Singh to kick off our session on mastering startup finance. Over to you, Tamanna.
Thanks, Hasna. And it's a privilege to speak to all the wonderful founders of Kela Incubation Center. And when I was approached, it was a good opportunity to meet fellow women entrepreneurs. Uh, so two things, ladies, before I start. One, let's keep it very, very interactive because one way communication will not work. It will be a monologue. Secondly, I would request, if it's okay, switch on your cameras and maybe just put yourself on mute so that it'll be easier to look at young, beautiful faces and, to gain more. So I'll highly, highly encourage. Um, Few disclaimers before we start, and I would love to tell you a bit about myself also. I'm a third-time entrepreneur. I'm a President of India awardee for my work that I do towards women entrepreneurship. My expertise lie in scaling a brand from 0 to 1 and from 1 to 10. However, I'm not a financial expert in terms of being a CA or being from the legal aspect. So I have tried to keep the conversations or the presentation towards generally guiding you towards that and the tricks that we have done as a third time entrepreneur that we understand. So request, not quote unquote, for legal advice and for all the compliance issues you should look at your CA and your legal partners, but I'll be happy to guide you towards that. Secondly, I just wanted to understand, do you want the means of the communication mode to be Hindi, English, or mixed? What is the general trend? You could raise your hand if it's all English. It'll just help us. Oh, okay, okay. Hasna, you need to give me a heads up. Is it English or Hindi or mixed? Okay, so I think it's more
I
of,
think it will be better with English.
sorry, Hindi. I think English shows more. Is it? So I'll try
Yes,
and mix
yes.
both up wherever somebody feels कि नहीं समझ में आ रहा है, I'll do it in Hindi. That's not an issue. All right. And feel free to interrupt in between. Just raise your hand. You could just press the button there to raise your hand, or you can keep noting down your queries, and I'll be happy to take over them at the later stage. I'll try and keep the presentation short so that we'll get more time to interact with each one of you, if that's okay. Yeah, so I'll just share my screen. Is it visible?
Yes, Tamanna.
Okay, thanks. All right. Hmm. So just let's understand as to what are we trying to understand today, why financial literacy matters, basic question है. And all women entrepreneurs in last 15 years that I've found is most of the time we run away from that. As a woman, I can relate to it. हमें लगता है ये हमारा field नहीं है. When it comes to technology and when it comes to finances, that we depend on our better halves or uh, can we I think somebody just raised the hand, so maybe we can just take it in a bit after this. So we depend on our partners or our co-founders or our husbands or somebody else in life to take care of finances and to take care of our tech part. So first of all, ladies, kudos that you all have stepped into entrepreneurship. आप सब entrepreneurship में, maybe this is your first time, second time entrepreneur, third time entrepreneurs, but this is something I strongly feel all of you should take care of from day one, because this is like a founding stone for how long can you survive and आप कितना लंबा survive करोगे and how what will be the end of your startup. So financial literacy really is very important for any business, and you need to know your numbers. इसमें कोई excuse ही नहीं है. Even if you require to sit with your CA to understand the terms, the jargons जो VCs या investors use करते हैं, या आपके CAs आपको कई बार misguide कर देते हैं in terms of giving you reports and all that. So it's very important. So financial fund, if you were to look what to expect from this session, as I told you, throughout the presentation, we'll explore essential financial concepts, जो कि tailor made है, especially early stage women entrepreneurs के, because I was told that is the cohort like, and we are going to understand कि typical words जो use हो रहे हैं या key matrix हैं या strategies हैं, what are they and how are we going to take care of that. I want it to be interactive, as I mentioned. So financial fundamentals. पहला, you would have heard this, top line क्या है, bottom line क्या है. बहुत ही simple concept होता है. Top line is just two fundamental basics. Top line is, it represents the total revenue generated by your business. For example, आपका एक D2C brand है. So we'll take a lot of examples in between. एक D2C brand है, तो आप total कितना generate कर रहे हो? Let's say through your website, through with Amazon, अगर आप और किसी e-commerce platform पे listed है, वहाँ पे, if you are doing a mixed sales, जो कि आपकी website के through भी हो रही है, it is also happening through a distributor. So you need to take care of that, the total revenue generated of your business. So that is your top line. Then, but top line does not include अगर आपने
Hi,
एक महीने,
Tamanna.
hi,
Sorry to interrupt, but if you
no,
can please do it in English, it will be better.
sorry, English?
Yeah, it will be better if you
Yeah,
can
I'm
do it
okay.
in. Okay.
Yeah. So, okay. So we'll start from top line and bottom line, as I mentioned. So top line is basically when we're talking about the total revenue generated by your business. It could be from your website. It could be through B2B, that is business to business. It could be through other platforms, that is through Amazon, Flipkart, or other e-commerce platforms that you sell through. It could be through other distribution channels, but total revenue generated for a particular month is the top line. But for understanding your top line, you need to understand your returns of that particular month do not or are not added in your top line. Your returns, your RTOs, your NDRs, which are not confirmed, they are not part of the top line. So top line is basically your revenue generated in a particular month from all the channels of that business. Then what is bottom line? As the name suggests, bottom line reflects the net profit after deducting all the expenses. So for example, you were to spend uh, on marketing, on ads, on salaries, your capex, your cogs, everything. So once you deduct all that, that is called the bottom line of the business. So these are two crucial things when you're starting out. You should understand that this is my top line, this is my bottom line, and how do I distinguish? Now, everything is between these two gaps, because that is where it will show the financial health and performance of your brand, right? So for example, let's consider Amazon. Despite its massive revenue top line, its bottom line profit margins has varied over the years. We know for the longest time, Amazon was not profitable. other than Amazon, even if you were to look at bigger D2C players currently, from Nykaa to let's say Mama Earth or any other brand in that category, or even not even D2C, even B2B brands or B2C brands, the top line is always the revenue. But when you look in terms of the profit margins, they're not there for couple of years. So when you're planning your sheet or when you sit down to make that sheet for your brand, you need to understand it will take some time for you to reach that profitability, and for you to long term sustain that. That is what planning is required. Now, another matrix that people talk about is cash in hand. What is your burn? What is your run rate? I'm sure you would have heard them and most of you would be aware of that. Cash in hand refers to the amount of money that is available to your business at any point of time. Burn is, it represents the what you're spending for that particular month to get those particular number of, let's say, customers or revenue. And runway is that what is the cash that you have in your bank so that you can sustain over a period of time. Now, these are very, very crucial and very uh, important metrics for you to measure because it helps you take those strategic decisions. We will talk about them much maybe later or when we have a Q&A. I'll be able to give you more examples on this. But your cash in hand or cash flow, which is another part of cash in hand only, is actually very crucial. And most of the time, we have seen brands over the years repetitively failing because this is one matrix they don't consider. That is cash flow. Cash flow management is super, super important for any business. If you have to forecast things, look at things, how your business is going to be, and how healthy you want to grow. So that short-sightedness of just looking at, let's say, the sales, the MIS, the spends that you're doing are important, but yet it is very, very important to understand the cash flows so that you know how long you can survive. It's like the oxygen for your business. And there are different levers that can be pulled to bring in more cash flows. And there are times when we have seen the cash flow is hampered because of the whole flow cycle of how your customer is interacting with your brand in terms of when he purchases, when the money is realized in your bank. So all that needs to be taken care of. It's a more in-depth subject, but these are just some of the topics that I wanted to cover in terms of identifying what is important for a very new startup. So next one is your budgets, projections, and cash flow management. As I mentioned, importance of budgeting, we all understand. And who better than did somebody say something? Sorry. Hasna, was there a question there?
No.
Okay. All right. So importance of budgeting. Budget, as I said, I think we as women are biologically and emotionally and mentally trained for that. We know how to save. Only thing is, when you have a startup, you need to put it in more structured way. We all agree. So this is one inherited quality women are born with. You should take leverage of it. I tell this personally to every woman entrepreneur that it's important that look at it from a forecasting point of view because it will help you give you that breathing space. So budgeting is a cornerstone of financial management for startups. As I mentioned, it involves forecasting and controlling expense to ensure financial stability and growth. By creating a budget, it helps you to allocate these resources very efficiently, then track your performance against targets and make informed decisions to steer your business in the right direction. Real life scenario, consider a case of startup that failed of budget effectively. And we have seen this over time. I think if you were to speak to some of your friends or colleagues who have been founders were not projected right, and the cash flow was not there, and all of a sudden, in fact, I'm sure a lot of you would be watching Shark Tank, and
Stop video করতে হবে। No.
Okay. I'll request participants to just be conscious their audios are on. If they are not asking something, it will be great if they can just switch off they can be on mute. So as I was mentioning, you would have seen a lot of startups, good brands. I mean, recently I watched Arata, which is doing phenomenally well in terms of their revenues and everything, but they have cash flows only for next 6 months, otherwise the brand dies. So that is why it is important that you are not overspending. If you want to be a sustainable brand, if you want to be, see, from day one, you will not be positive. So it's okay not to be positive, but if you have a plan how to be positive and how to not put that extra financial stretch or stress on yourself, it is important for you to make these kind of budgeting plans and stick to it. And then, of course, projection of growth, because you know there are times when you just started 3 months, maybe you're trying the market. Next 3 months is when people have started buying your product. And down the line, 6 months, when you actually want to start scaling, you need for that projection of growth, because when if you're looking for funding, the VC or the investor is going to ask that I need to see growth, right? With only selling 10 products or 100, having just acquired 100 customers, you will not get funding. So if you have to look at that growth, you need to pump in budgets. So you need, it's very important for you to have these milestones set wherein you can say that, hey, if I acquire the first 100 customers, this is the spend I'm going to do on, let's say, even PR activity, or I'm going to have a influencer activity done, or maybe I'll have additional thing, that will help me grow my business. When I hit the, let's say, 5,000 mark, I'm going to do this. And this is what the budget is allocated for. If I'm going to hit a 10,000 mark, this is the budget that I'm going to do. And this is what activities, what is positioned against that. So that projection of growth is not only in terms of numbers. You need to take in stock, and you need to understand that it has to be mapped with the kind of activity that you want to do, and it's going to the cost of that activity. So it helps you to have that whole framework of 1 year when you start. So let's say do a case study. Let's examine the example of a startup, that accurately projects its revenue growth and cash flow needs, allowing it to secure funding from investors and scale its operations successfully. Now, finally, effective cash flow management is crucial for ensuring your business has enough liquidity to cover its expenses and sustain its operations, right, over a period of time. This involves monitoring your cash flows, inflows and outflows, optimizing your payment terms with suppliers. That is another lever that a startup should actually pull, and maintain a buffer for unforeseen expenses. Example, consider that a startup is struggling with cash flow due to delayed customer payments. For example, by implementing strategies such as incentivizing early payments. For example, at checkout, you say that we'll give you 2% extra discount if you do a prepaid order. So you're just incentivizing them to pay you early so that the money is realized in your bank early. And you have that cash flow that can keep rolling on. Negotiating extended payment terms with suppliers. If you have a 30-day payment term, if you can get it to 60 days, 45 days, it will give you a lot of breathing space so that your cash flows can be churned around. And this way you can, really, really make a healthy cash flow position for yourself. I would, at this point, like to encourage and ask if you can let me know what could be the other reasons of delayed payments. I mean, you all are in business, and you understand how it is. So what is that? What is the bottleneck in terms of the reason of delayed payment that you have seen or come across? Anybody?
Um, well, for me, they say 60 days credit, but then they come back saying they've not sold. I'm into publication, comic book publication.
Okay.
So they come back saying, they've not been able to sell the books. And so it's endlessly delayed. And then some of them just refuse to pay at all. Even if they've actually sold the books, because after one period we say, okay, if you've not sold it, you can return the books, but they don't return, and they don't pay either. That's
So, Preeti, what do you think? I mean, can be what lever could be pulled in this case? We're just brainstorming to help you here. If you were to get the payments in time, or you were to ensure that the payments are made, especially if they have made the sale.
As of now, I'm really out of ideas on how to, because I keep calling, I keep And in fact, I sometimes meet these people in exhibitions and everything. But then they just say, ma'am, when I confront, they say there is personal issues or, things like that.
So
So,
what if you were to offer them and you are you understand your business better, but what if I'm at your place and if I say, hey Preeti, you have been buying up books and we would like to set a payment term wherein I would request if you can give me a post-dated check, right? Of 45 days. In case the sale is not made, I will not encash it, but I would like to present it because that gives you a legal withstanding, because deferred check payment in India now is it's a legal offense. So you're booked under 420 directly and they pick you up overnight. So,
okay.
so if I were to ask you for a post-dated check on my
Okay.
company's name, that is a safety net that you could use.
Oh, okay.
Yeah.
Fine.
And secondly, you could also encourage them that, okay, this is the amount that is there with you. So, hey, Preeti, you have 10,000 rupees that you owe me. Why don't I just send another set of books to you?
Mhm.
And, you can make the payment later. It's okay. Don't pay. I'm okay, but I'm sending you the next lot. I'm adjusting that invoice against the new books that I'm sending to you. Will that work for you?
You mean they've not paid for the first lot, but then
But you're
I
invoicing them for the second one, adjusting that amount.
invoicing them? How I didn't understand.
So, for example,
Mhm.
you have a credit line.
Yeah.
I'm giving you a credit line. You have sold books worth 10,000, for example, right?
Mhm.
You owe me 10,000. I say, okay, you don't want to give me. I'm second you the second lot, and that is a purchase bill, which
Oh,
means that I have forced you, wherein I have adjusted that money that I'm taking from you for the new lot, but my money is kind of recovered for the first one.
oh,
We'll discuss this in detail, or we can discuss it offline also. That's not an issue. So what happens is this is called like a rolling credit,
oh,
wherein you just keep putting a pressure on the distributor because his bill is going to go up from 10,000. Now I owe you 20,000, but you're
yeah.
saying I'm going to just so pay me for the new one. You don't want to pay me for the last one, pay me for the new one. Idea is to get the money out in
Uh-huh.
some way,
Oh,
you know.
oh,
But I think delayed payments really work very well. I mean, you can get a check. It
okay,
really works. Yeah.
okay. Because sometimes what happens is if you actually put a bit of pressure, they say, ma'am, just take away the books. You can just take it off, and then we don't want.
Um, there is another way wherein you buy. For example, what happens is that if the books are lying with me for let's six months, and you
Okay.
know that at least 20% of them are not going to be taken care of, and it will be all damaged and everything. So you can give them a discounted. So if I owe you, let's say 1 lakh, you can give me that. I'm going to give you this month. Hey, I'm filing my GST finally, or I'm filing in my financials. If it's okay, I can give you a further 10% discount and settle this, but you have to pay now. So that
Okay.
that that discount, that further discount can also help at times.
Okay, fine. Okay. Yeah.
Anybody else who can let us know what are the other reasons of delayed payments? So some of them, if I were to mention, some of them are like, let's say shipment. You book your shipment, it says 3 to 5 days, it's on a COD. By the time it will reach, it's in 10 days. If let's say I'm based out of Delhi, the pin code is of Guwahati. It reaches in 10 days. The money is collected. By the time it is sent to my bank, it will take another 7 days to 10 days. So I'm in that 21-day cycle, right? So that is where what happens is that if you're working after 15th of every month, your cash flow is actually for the next month. That month it's not possible. So that is where the prepaid offers another discount, 1%, 2%, and that is how you need to even calculate your cash flows. Any other reason that one can think of for delayed payments?
Yes, ma'am.
Yeah, sure.
I'm into construction business.
Okay.
So in our case, when we finish our work, And when we bill it, the client asks for time to check the bill. And sometimes the checking part extends to such a level that our cash flow management, all that thing topples. And sometimes they tell me that, okay, we have some tightness, so can you please adjust with this amount? They will give some maybe your 60% of the bill, like that, and the
Okay.
amount gets
Stuck.
pending.
Are you working with government agencies?
A bit of government agencies are there, and some mostly with private agencies.
Okay.
Yeah, we have a ratio of around 60-40, like 40 percentage with the government and 60% with the private.
So I would also encourage, especially women entrepreneurs, to get their MSME certificate, right? What happens is that once you get your MSME or MS or SME also, there is a payment restriction. I mean, you have to release the payment in 60 days, or otherwise it's a penalty that is there. And if you were to raise that with a legal cell, with MSME or SME, you can just write to them. They have their own lawyers who represent and send notices. At times, this strategy also works. You know, it's just about who can push whom first in the corner. And I would also encourage that if you have so who looks after, you have a CA in house or accountant or somebody?
Yeah, yeah,
Yeah.
we have.
Yeah. So get them to chase the person. Because as a
Okay.
founder, it is very, very important. And I seriously want all of you to think about this. As a founder, we are not manager's manager. What is happening is we spend 70% time of being manager's manager. Accounts, what is accounts guy doing? Taking a feedback. What is performance marketing doing? Take a feedback. What is the supplier doing? Taking a feedback. So we are becoming the manager's manager. We are managing our managers. The system has to be different. We are a founder. Our prime job is to get inflow of, let's say, business in the business, right? To get money, to get different streams of revenue. I'm sure the IQ level or the experience or the expertise that we have as founders, our team members don't have that, right? And that is what we are meant to do. If we are not doing the founder's job, then who will do the founder's job? When will we get the business? Who will get the business? Everybody's salary is dependent on us, but we only have to get the business, and we have to check them also, their reports also. So empower your team members, empower your CA, that every month you get an incentive of 1%. If you get all the bills cleared, how you do it is your business or your accountant. This has to be cleared. He has to write to every party asking them they have they deposited GST, have they deposited the payments and all that. So incentivize or empower your team. Imagine if you have like 20 lakhs stuck with different other vendors, and if your team member has to get 1%, he will put his life. He's getting more than his salary, right? He will do it. Yeah. So that's the only thing. So just think a bit out of box. We know all those tactics. You know, we know as women, we have the third sense, sixth sense actually. So it's you have to just figure out what works best for you. Those kind of things. Yes. Anybody else would like to chip in, or we can move forward? All right. I think we'll go forward. All right. So as I mentioned, some of the points, I think you would all know about it, like unit economics and break-even point. We all understand what is a unit economics. It's essential for us to understand so that we know which way we are going, how can we scale, and why it is important that which lever to press or pull so that you know this is going to work very well for you. I'm going to give you an example here. So a business I recently consulted had two sections. It's in a salon business. So one part is the salon, which looks after, it's a unisex salon. So does everything from hair color to haircuts to facials and everything. And the second part of the salon was into the other wellness treatments like laser hair care, laser hair services, and all those services which were with machine. When we found out and we looked at the unit economics, the salon was spending 90% of its money in terms of the resources, the salaries, the employees, the infrastructure for this particular salon. which had 16 plus chairs. When we analyze their whole statement, we realize that typically the highest number that one could earn from, let's say, women will understand it better. Let's say if they have to get their hair fully colored or maybe get streaks done or something like that treatment, the highest value of the product was 8,000. And the COGS of that, I mean, when I'm coming to the unit economics, the COGS of that was around 1,500 rupees. So out of 8,000 minus 1,500 is 6,500 is what they were making, and minus another salaries, another 1,000. So 5,500 is what they were making out of that COGS. Compare that to a laser service that they were least interested in doing. They bought a machine. That laser service was selling for 1 lakh for 6 sittings, which means 20,000 per sitting. And the cost, the unit economic cost of that was coming to 2,500. So it is no brainer that a person was earning 17,500 at one place from a same set of client, and 5,500 from the same set of client, but the expenses here, overheads were too much. And look at the multiples here. So at times you need to understand which product is giving you the maximum returns in terms of even unit economics and in terms of even scaling. You might have 10 products, 20 products, 50 products in your service. For example, like one of you mentioned that you are in books, but you may when you go deeply and start analyzing the COGS of it and the unit economics and everything deeply, you may understand that maybe kids books work better because, let's say, parents don't want to compromise. Kids are very demanding. They have seen a particular book, and this is the better push way. If I give a freebie along with it, with every purchase, or it's much easier. The cost of acquisition is much more cheaper or lesser. Vis-a-vis, if I have to sell books to, let's say, on leadership, there are few people, maybe the people who are accessing the book are not looking at those kind of books, or there are maybe more female clients who are not inclined towards that. They are towards the recipe books. So if you were to make that graph for your business and diversify and look into every single unit economics of sections that are there, you'll be able to put those levers where you know that, okay, if I spend another 20%, let's say with kids book, and if I do only a kids book fair, let's say in schools, or let me tie up with schools, that maybe free reading, let me get a good influencer who can read for them, and I can make more money, So those, or maybe with clubs, or maybe with let's say movie halls wherein parents want to leave their kids for 2-3 hours, if I can provide that kind of service. So there are a lot of levers that can be pulled with spending very less. So you need to understand your unit economics first so that you can take those decisions. So that's a good exercise to start from the beginning and do it with every single product that you have. Usually I've seen people taking it as whole unit economics, or maybe, let's say, if you're creating shampoo, they will just say shampoo, what is the unit COGS and what is for the moisturizer and all that. You need to put even from the fragrance point of view, although the price point may be same, but the selling quantity could be that maybe lavender is selling more, or the onion shampoos are selling more. So you need to just focus where, what is grabbing the eyeballs of a customer, practical application, this is not required here. Okay. So just give me, okay. So calculating break-even point is another thing that is important, because when you correctly calculate your unit economics, you will also understand that what is your break-even point. By break-even point, most of us, we understand in our businesses, basically after post that, we will start making money. So you need to understand that, okay, I need to sell, again, going back to, let's say, beauty and wellness segment, that I need to sell so many shampoos or so many, or let's go to the books. So let's go that I need to sell so many books. Maybe if I give a tote bag of 100 rupees extra, that is an extra, I can increase the AOV, the average value of the product or of the things that I'm selling a bit more, maybe a pencil set with it, maybe something else. So that is what you need to calculate, that, hey, I need to do this much to have a break-even point, post which this benchmark, I'm going to start making money. So it is, and this also helps as from an investor perspective, when we can look that, you're thinking very deeply, you understand what are the all aspects. And secondly, it makes us understand, because nobody's looking. See, all VCs, investors say that they want to make money, but they know in their heart of heart that for 3 years, 4 years, they are not going to make money. So from that perspective, if you as a founder can clearly communicate that what is your path, at least there is a scope that I can make money or I can get my money back at least, it will make a lot of sense. So you need to have that kind of clarity. Financial statements. This was personally one of the most scariest topics for me. For the longest time, I used to keep asking, what is the income statement? What is the balance statement? How is it different? A balance sheet bharni up, when initially my CA would call up that TDS has to go, GST has to go. These are all jargons. It will practically take you 1 day or maybe 1 month or maybe 6 months, but get hold of it. You need to understand, but in real life, if you were to talk, MIS is what is important. Cash flows, we mentioned, it's very, very important. Balance sheet helps invest from an investor point of view, and even from your perspective as a founder, helps you understand that which way the business is going and what is the profit and loss like, what's it looking like, and in that specific time, what are the liabilities, what is the equity structure like. So it just helps us to overall understand. And I personally feel that a lot of us depend on, we have to depend on our accountants to make that MIS sheet, but ensure that you're looking and understanding all of it, because there are small, small nuances which is going to cost you a bomb if you don't look at it from the beginning, rather than having 12 months or 2 years backlog and then trying and understand and fix, do it month on month. So even if you have not done it so far, get into it, try and understand last month's sheet, then go back, see if all the filings are done well, because you have to understand, taking back, from an investor's perspective, when the due diligence is done, that is where a lot of these checkpoints are seen. You may not have that perfection. We understand it can be 5%, 7% mismatching or some other things. Recently, we saw a balance sheet wherein the manufacturer had put extra GST bills on the portal, and that is why the balance sheet was showing a direct negative cost of minus, which was just not explainable by the founder. And they kept saying ki we have extra stock, that is why it is negative. We have extra stock in hand, that is why it is negative. And when we forced them to go back, look in the books, and they found that, I think 6 months back, their accountant only picks up sales only through GST portal. They don't check that from the physical invoices at your company. And that is where the mismatch was, So there are times that these things happen. And believe you me, there are times when most of these mistakes happen because of a wrong accountant or a CN system. So in case your CA and your accountant are not reliable, get rid of them ASAP. It may cost you a bit more, but go with somebody who understands, especially if you are a D2C business, because most of the time we have found that accountants and CAs are not equipped with D2C brands. They have a typical setup of a B2B or a B2C kind of brand that they understand. But from a D2C's perspective, where the sales are higher on a daily basis, and then returns, and then there are NDRs and a lot of other things, you need to have a CA in-house accountant at least who can understand that. And do not save on your financial team member. That is one place you should not. Maybe do 5,000 rupees less of advertising or cut down your budget somewhere else. But this place, don't do these kind of things. Otherwise, it is going to pay you. You will need to pay on a heavier price at a later part, especially if you're trying to raise funds. So that's very important. Funding options and investor relations, I've briefly touched upon. There are two ways. Either you could be bootstrapped, you could look at angel investors, VCs, crowdfunding. There are pros and cons about that. If you think that you're just doing business for raising funds, I think that's a very wrong. and I'm being a bit biased here, a lot of male founders I find these days, they're only from in the ecosystem, especially the younger ones, they have heard these words that, let's get funded and let's do this and that. It's very, it seems very easy, but when you have somebody else's money, your responsibility increases multifold. You're answerable at a lot of stages, and you will be cushioned. And we are seeing a lot of larger brands now dooming because they have not done the due diligence, or they have not taken the right path in terms of expanding. So if you think that you want to be bootstrapped, again going back to your cash flows and your projections and what budgeting is, you need to see that how long can you bootstrap, what is the idea, what is the peak that you want to reach, and what is the exit for yourself. Exit plan is not always for VCs or investors. You also need to understand as a founder, what is your exit? Do you want to do this for rest of your life, right? If there is a good opportunity of acquisition, or who are the brands who could acquire you, you should always keep track of all that. If you're looking at angel investors, there are a lot of angel investors. They will keep cushioning you, but at the end of the day, it is important to have an investor who can bring in value to the whole ecosystem, who can give you those kind of connects, or at least guide you. Angel investors are mostly not, they are not on board, so they don't bother you on a daily basis. But these days, I personally have seen a lot of brands, a lot of angel investors, or people with extra money, actually, I should say, who want to be angel investors, and they just want to say that they're part of a startup, and that is why they invest. But their checkpoints and their interference is really on a large scale, which was not there earlier. So these days we see a lot of angel investors. So pick your angel investor. That's like picking up your life partner to some extent. So that's important. And this life partner will drag you to court. So you really have to think about it. VCs and capital come after a certain period of time, until unless the idea is really out of the box and they see huge potential. So even if the investor and bankers tell you that we have VCs who can look into coming in soon and all that, till you don't have the numbers. Currently, the market is such that brands who are doing a monthly revenue of even 2 to 3 CRs are not getting funded by VCs, because they are just looking at profitability as a criteria now. But I personally feel, this is my personal view, that profitability will only come once you scale, and you need time for that. So VC they'll come later. Crowdfunding, or your nears and near dear ones, your family members, is something that you can look for. And that is where, when if you're just starting out, you should know who can help, who can invest, and who can help you all the way. And whom all can you pull in terms of if funding platforms in India, globally also. In India, a lot of legal regulations are there that need to be seen. A brand like Tyke, which is into crowdfunding, has been now regularized, so they are running into a lot of legal battles. So you need to see that. Just don't go with the wave in terms of that everybody is going for crowdfunding, let's go there. You do your due diligence, take your time, and for that time, you need to understand and have the breathing space and the money to run your business. Meanwhile, you need that time to think and to look at pros and cons of that. So this is what it is. And yeah, so, and financial risk and mitigation, we all are aware of. It could be a lot of things. It could be financial turndowns, market fluctuations, regulatory changes. Look what Paytm is facing now, operational changes, and among others. So you need to be ready for that, because financial, this also includes understanding the human resource, because what happens typically in a country like ours, where you will have a good resource, and without even giving you 30 days a notice period, he will go. And let's say if you are paying him a salary of 30,000, and you are so much dependent on the business, on him, that maybe the next hire would be at 45. So those are the also kind of fluctuations that from an operational challenge point of view, you need to take care of while you are making your budgeting and you're forecasting your year or a quarter ahead. So again, measure what matters. That is very important. Some of the other key metrics that you need to measure: weekly tracking of MIS. And I'm very strong about weekly tracking this. A lot of founders only look at it, and that is where your CAs and your accountants guide you wrong, that MIS will be completed after a month, it will take us some time, or let's do it quarterly. You have to, as a founder, look at it on a weekly basis so you know which way you are going. It's at the end of the day your money, it's your hard-earned money or your hard-saved money that you're putting in. So you need to track your monthly expense sheet so that you know what is happening with the business on a weekly basis also. There are other metrics. I found that there are times when founders are only obsessed with the revenue. They're not looking up that how many new clients have you got, what are the follow-ups that you have done or your other people in the company have done, what is the conversion rate, what are the sessions like. These are few metrics, especially from a D2C perspective. But I also see, so if I were to just talk like, I think the one I spoke to just now, who's in construction business. So if you were as a founder, not, let's say, you're just depending on the business that you have currently, it'll hold to you for next 6 months, 1 year, till the time. But on a monthly basis, how many new clients are you acquiring, or are you actually meeting? So if you were to meet, let's say 50 clients, you know that you're going to get, you got to, let's say if you have to reach out to 50, only 10 will revert. Out of that 10, 5 will give you time and only 1 will finalize. So, that's also a time frame that you have to look at. So new clients, follow up, conversion rates, sessions, all these are important metrics as a founder that you need to look at. You need to look and measure your team performance. This is something, again, we miss out. And because we are talking about financials here, I also feel that team performance is also part of financials, because if your team is not performing, that is costing you. Every money that you're spending is going down the drain if they are not performing. So their performance matrix, their role in the company and how you're measuring that success is also should be done on monthly basis, and the reviews need to be given. I'm also a strong believer that team meetings and should not take much time. Everybody should give their own follow-ups, but you should not have team matrix or team performance analysis just when the payday is approaching. That leaves a bad taste, and it also brings down the morale of the person who's working. So you should ideally do it once the pay is given, or so that the person feels safe in the company. They know that they're working for something, towards something. If there is a scope of improvement, they will improve. But putting it like just like a sword on their head during when the salary is about to be released should be avoided. Average order value, a lot of people don't look at that. What is the best way to add these, add to the AOVs? Like for the books, I mentioned that maybe will the bags work? Will something else work with that? Maybe a tote bag or something else that can be done. So that will help a person to increase your AOV to a greater extent. Your CAC is very important. We've already customer acquisition cost. You need to understand how much you're spending in getting that. And at no point you should forget, as a founder, you need to bring that down on monthly basis. Your CAC, if you're a D2C founder, when you started, what was it? You need on a quarterly basis. CAC can be although seen on a weekly and a monthly basis. But if you have a healthy goal of quarter, that in this quarter, we're going to bring it down here, that is what the team or you or a performance marketing team guy needs to work on. And same goes for the other businesses too. Your ARR is again important that you need to look at. Your growth rate versus stick rate, that is your, how many people are sticking to you, how often are they coming, and that also brings us to the LTV versus the CAC. So your lifetime value of a client is very important. You have to understand as a basic principle, when is a sale closed? A sale is closed. So if I'm a first time buyer with you, I come to you, I buy. Again, coming to the books, I come to your website, I buy a book and I go back. That is not your sale. How you actually calculate sale is when I come back to you next month and I buy something else. So that is when the sale is closed. That is when you will make money. The more I'll buy from you, then you will start making money. Because first time when I purchased, minus your COGS, minus your other acquisition cost, other matrix in performance marketing that you spend, you will not make money. So you will only make money when I come second time, third time, fourth time. That is why your LTV is important, and every client, especially for D2C, you need to measure what is your LTV. Are you growing month on month? And 15% is like the basics of that, but anything above 30% is considered great. So you should try and look at achieving that figures. Build a ROI calculator. It's very, very important. So there are two types of ROI calculators here. ROI calculator for a startup, ROI calculator for a customer. For a startup, of course, we know that of spend we are doing and the return of investment that is there. We can calculate that our CA gives us. But a return of investment calculator for a customer is also very important to understand that just by spending another 5-10 rupees or just by giving him another set of discount, how is that I can make their life better? It's about if you have a customer whom you've already acquired with after spending so much money, how is that you can get more money out of that customer? So that is why ROI calculator, which is again like a LTV only for a customer, is important if you want to grow in long term and have at least a cohort. So if I were to say, let's say if you're a D2C brand and tomorrow for example, say Meta and Google is not working for you, or they have blocked your card, or there's some issue, or the ads are not running because of violation that is there. So can you get, let's say for a whole month, can you get orders or revenue from your repeat clients or from clients who have purchased from you? So that is how your ROI is calculated for your customers. Turn fixed cost into variables. For example, if you think you're burning too much, you can think of variable cost. For example, accounting, you get third party these days wherein they charge you per data entry. You can look at rental spaces like WeWork is there. You can get the hot passes so that you can save on the rents of your office space and all that. Think of branding in terms of, how many units sold. So there are these are some of the levers that you can pull if you are running out of cash and you think that you need more runway. And then managing low cost margin business is also very, very important. Most of the time, people only look at profit margins, but velocity is also important. If you are running on a low cost margin business, let's say you are in food industry or any other industry where the margins are very low, for you, velocity, that is the number of times the buyer is coming, how quickly is he coming, is going to be very important. So you need to look at that and not only at profit margins. So it will help you to scale faster. So lack of identification, measure, or insights on input matrix can make one set goals, and then you will feel that you have no idea how to achieve it. So define your input matrix, that what are these measures, what are the metrics that I need to measure, right? Output metrics, that will help us drive the input levers. That's where your moat will lie. That is what will set you different from your competitor. There is a 70% rule which says launch, fail, and pivot fast. I always say if you want to fail, fail fast. It's important. You need to pivot fast. Just don't be madly, deeply in love with your product, with your brand. If the market is asking for something else, once you have launched, you see that I see a growth here, you need to keep pivoting till the time you actually find that product market fit is there. And that is what is easy for me to scale. So that's very important. There is a rule of 3x. I always tell, especially women entrepreneurs, when you're budgeting, whatever budget is there, let's say you say that I'm going to spend 10 lakhs in next 6 months. Take it in writing that you will spend 3 times more. If you think you're going to work, you're going to complete this work in this much time, or this is your deliverable time, and this is the timeline that I'm going to achieve, reaching to next 10,000 customers, it will take 3x the more time. So it's a 3x rule. And if you think that this is the money I'm going to spend, other than acquiring customers, it's going to, the only thing the 3x rule does not work on is your revenues. If you think that you're going to earn 10 lakhs and you will earn 30, that will not happen. It will be the other way. So you need to be ready in terms of your time, your money, your efforts. Everything is going to be 3 times to what you are making plan of. And that is what we have seen over the years. And then there is a 3-step framework, that is data analysis. Your data is the key to whatever you are doing in your business. So have a setup, find the conflict, or if you identify the conflict, then is the resolution. As a founder, our aim is to take quick decisions, firm decisions, and to stick by it. Don't be fickle-minded that, okay, Ajay, let's try this today, let's try that today. You need to set up, have the conflict. Once you identify the conflict, that this is the problem, you need to find a resolution. If it's through third party, it's through human interference, it's through somebody else. You need to get in somebody expert for that. Just find the resolution. That is what speed is really important when you're doing a business. As a founder, you can't afford to delay decisions. These are some of the case studies. That's not important. We'll just do. So key learnings and takeaways that we can look at. So as I mentioned, measure what matters, because you can only improve what you measure. That is the crux of everything, because what is happening is that we don't measure and then we feel lost, that this is not happening, that is not happening. You need to understand what is important, and then only you can improve. So I think I'll close here and let's have some Q&A. It's been a
Ma'am,
monologue.
ma'am, can you put some light on how to prepare the cash flow?
The cash flow?
Yeah.
Yeah. So for the cash flow, you need to understand, let's say, so this is called forecasting, right? You're in construction business, right? You mentioned that. So for you, if you were to make a cash flow of a quarter, 6 months and 1 year, that is how you need to start with, so that you know. Now, you know that there are going to be fixed expenses in terms of your rent, salaries, and whatever. You also need to consider that after, let's say, 3 months, if there is a milestone that you have mentioned on the other page, which says that, let's say we have 5 contracts, I need an extra architect, or maybe I need a new vendor, or I need something else. So that means the hiring person also needs to be accommodated. So let's say the first quarter salaries are 3 lakhs, it may go up to 3.5 or 4. Or you give yourself that, you should actually, as a founder, also look into that, I will hire. Even if it's not required, you should hire, because, at the end of the day, every human resource in the company is getting you business. And that is the cost you need to put, that every person is getting me with every new hiring. I need to have, let's say, 3 lakh, 5 lakh rupees extra business. What is the key skill set that person needs to have so that I can manage that? It could be person who's licensing with people. It could be person who's getting you tenders. It could be some licensing officer within the government, or a retired person. So where are you spending that money, right? This is from the human resource point of view. Next, do away with. Let's say for you, it can be the material that is coming in. So you know that, let's say for, I don't know if you're in construction that way, or it's only construction material. So I'm just giving you a vague idea.
I'm into
So let's say
construction.
we take 5 new projects for 5 houses. This is the material required. When we amplify this to from 5 to, let's say, 10, and then 15 and 20, this is what will be required. So you can put it in your cash flow sheet. It will show you that, okay, if you are, let's say, in 5, you need this much only, but if you require, let's say, 8, you are nearing 10. So this is the cash flow that needs to be there. And that is where the hiring and everything also would be, done. Now with that, you can do a forecasting that this is what my goal is. At the end of the year, I want to complete 50 projects. Let's divide that 1 quarter in, let's say, in a scenario, people don't construct because of the religious belief or whatever. And they only, so for example, if I were to see, I know around Diwali, a lot of cleaning companies get a lot of contracts, suddenly everybody wants to get their house painted and all that. So that means, is that the peak? So I need to put more money that time in terms of my, if you're getting clients through Google or Facebook or through references or whatever, or through companies, that is the time I need to catch them. Or should I catch them 3 months before because they want to shift to a new house before Diwali, right?
Okay.
Yeah. So you just need to figure that out and plan according to your business. So you need to go in detail, and you have to work as if, let's say, if you were to work with some other founder, and you have to explain that this is my business and this is what I want to achieve. So the best way around that, if you are doing it for the first time, is have as number of sheets you want. Have to 10 sheets, 15 sheets, 20 sheets, whatever you want to plan for the whole year. And at the end of the exercise, maybe take 2 days, 3 days, it should all come down to one paper. Your yearly plan, your goals, your money required, your manpower required, the multiples required, how much man hours, everything needs to come on single paper, so that you have that clarity that this is how it is going to be. I put in 10 lakhs, I know that I'm going to get 1 CR business. I put in 15 lakhs. So this is no brainer that then you know that, okay, this requires, maybe I'm looking at a wrong direction. I need to just focus and just amplify what will amplify business and revenue for me.
Okay.
But
Then,
have
ma'am,
a good run rate. I mean, don't go for 6 months. We as women tend to have that. You should know your sources. You should know whom to depend on. There are, see, as a human nature, people who will promise you might come up with some emergency. They might refuse. So you should know, have a good, a lot of us don't realize this, but we should have good terms with our bankers. They give you overdraft in short term and all that. Have a good this thing. And usually we, if it's a joint account between you and your husband or a male founder, we leave it to them. Okay, you have that. Let's utilize us being women entrepreneurs as our stepping stone. Have a good repo with your banker. If you have, let's say, 10-15 lakhs which has been lying in your bank, ask them that, why don't you give me that credit line now so that I can use it. So always have, when I said that 3x rule, that also means that, I mean, I'm sure you would be doing it. Like if you have one vendor, have quotation from 3 more. If you have one banker, have 3 backups. If you know one person is committed to you, have 3 more, because you never know. So more the better. And then there are there are a lot of other platforms now which give you these small funds, but the rates are high. So even if you are making a margin of, let's say, 25%, and if you were to give 12% to the bank or 18% on a very short term loan, you should pull that lever, because it'll, in terms of the revenue that your company will get in the year, that is increasing. So from the top, your top line is increasing. Yeah.
and then one more thing, ma'am. What about the balance sheet? You said that balance sheet has to be prepared. It's good if you prepare it on monthly basis,
MIS.
rather than go for yearly. But
So-
in our case, it won't be applied, right?
No, balance sheet is done once a year. I'm talking
Mhm.
about MIS, monthly income statement. So
Okay.
your CA knows that what is in and what is out. So very recently, I'll give you an example. What happened was that a D2C brand who does 30 lakhs in business, let's say in January, and they had spent 15 lakhs on Meta and Google platforms, right? Now, when we saw the MIS said that they have only spent 12 lakhs. But the spend was 15 lakhs. Now, why is that gap? Because Meta issues a bill on 1st or 2nd of next month after the billing cycle. So as per accounting rules, it is considered in next month, right? So accountant is right. But in terms, what he's doing is he's taking the spend of the previous month, which was December, which was 12 lakhs, and revenue of this month. So when you look at the MIS statement as a founder, you feel, oh, I had spent 12, but I got 30, which is not right. So you need to have, there is one from the accounting purpose and one from the financial purpose. So you can always have, okay, this is what I'm spending on a weekly basis. This is more true towards the D2C brands and, fast business kind of thing. For your case, even a monthly MIS would work, because mostly what happens is that they will tell you that till 7 they are putting up the TDS, then the GST, then by 15th or 21st. So you're practically 45 days away from what you have done last month. You as a founder need to know. So you tell them, give me an Excel. I need to see, every week I'll check, but I need to know where my money is going. It'll help you put stoppage on some seepage that is there in the system in terms of the cash flows. Yeah.
Okay, thank you.
Thanks. I don't know how useful the seminar was, but I had a mix this thing that there were startups, early stage startups, late startups. So I'm happy to any kind of question, anything anybody else asks.
How do you go about choosing a CA? Because I inherited this business from my husband who passed away. So I'm kind of clueless about how to. So I also inherited the CA with the business. So when I try to understand the in statements, like you mentioned balance sheet and P&L and all of that, what actually initially I didn't understand when I tried to check the actual expenses and income against what is mentioned in the balance sheet and P&L. There were a lot of variations, and I think because he doesn't understand the business itself, he just put in slapped on numbers and just finished the thing while
Mm.
filing for tax. So now I want to change the chartered accountant, but then how do you find out who's good and
So
it's also
that's a
I
good
can't
question.
afford a huge fee. I can't afford a huge fee. So that's also a thing. If you don't go, if you're not paying great monies, then do you get a batch CA and somebody who cannot, he doesn't have the time to explain to you, especially
Yes.
because you're a startup.
So that's a great question. You need to just first understand, as I said, you need to understand what you need to measure. Then only you can ask the right question, right? So from a balance sheet perspective, yes, a lot of times we have seen CAs and accountants just putting it under one heading, marketing cost. But you want to diversify and you want to see by which marketing cost out of 10 activities that I did is giving me what kind of revenues, right? Or what costed me a bomb and was a wastage completely. Or in terms of the headings that they put, you're right, that they try and bundle it up. First of all, you need to set that mandate that I need it split into different accounts. Every time I'm giving you my bank statement, sit with me, understand, tell me under which heading have you put. And you can get that changed. That is one. If you have not faced any kind of legal compliances so far, then you could maybe continue. Usually, the practice that I have followed while hiring even a CA or for that matter, any agency is that I usually go to 2, 3 people. I ask them for quotations. I tell them that you just need to get one guy to understand and tell them that, hey, where is the problem? Just to get your account, they will find 10 faults, right? That is one. Then you give that 10 faults to somebody else that, hey, this is there. What is that you can do? They will tell you the answer to that. What happens? Then you go to the third one. So the best way to learn, and I have done this, believe me, with performance marketing teams, I would tell them that because I could not understand what were the jargons and they were using. We are going to use this, we are going to use this matrix, and it just goes. And at times you feel shy that even to ask, "Kecha, what does CAC mean? What is this?" And they just want to throw those jargons and to push you in the corner that we are the ones. No more. So you just take one, understand that, give it to the second one, then you ask him, why is this not there? Why is this not there? Why is that? Then then you get that confidence, then you go to the third one. So it always works. Pit them again, let them fight against each other, and then you choose. Meanwhile, there are a lot of agencies who do virtual financials also for you. So that is where when I mentioned that you could have them per invoice or otherwise. So there are financial CAs, virtual CAs, virtual CFOs also. They cost you a bit less, but in long term, you need to pivot. You need to have your internal person. So what you could do is you could maybe look at a accountant who's in-house and a CA who's outside. So CA's job would be look at all the GST and all the filings and everything. They need to cross-check everything. You keep asking them every month. I have same set of questions. They know I'm going to badger them with the same thing. Where is this gone? Where is that gone? You need to keep asking them. Then they know their working style. It's an initial teething problem of a month or two. Then things are fit. But keep asking them. I don't understand. Please spell it out for me. Please spell it out for me. I cannot do it. And since it is February already, any new CA will not take the account till April because they would want the last one to complete the financials for you. So
Yeah, but
if you look up, it is a good time because you know that from April onwards, this can be handed over to the next guy.
September is when you need to file ROC with this
Yes,
chart.
financial year closes now, no?
Yeah, but then they just delay it, and then I asked them, so don't you have to pay a penalty? Yeah, you have to pay, but then it's the fault of whatever website and
No.
this.
So you have to be like, that's what I'm saying. You have to write when you hire a CA.
I don't know if that is normal.
No,
That's my
it's
issue.
not. It's not. So the mandate, I'll tell you personally for me, what has worked, my mandate to my CA is you are coming on board, you're going to look at the account. I will not pay even a single dime for penalty, anything that is caused while you have been my CA from government side. If it comes to you, I'm going to 3 times amplify and put a case on you. I make them sign that. Whether you like, if you know I'm hiring you because you know your business, right? I'm trusting you, you know your business. And if you are going to have me put under the bus because of your compliance issues, I will not take it. So my guys are, Seventh is like today my CA was telling me something and I was just like, my TDS goes on third. I say, why do we have to wait on the last day? Seventh, let's say site is not working. I'm going out. I'm not available. Who will do the filing part, right? You have to log into your business account and do it. Sorry, I'm not. This is my timeline. This is what you have to follow. If you think you can do it, come on board. Otherwise, I'll find 10 more people. And they don't want to lose your account, believe you me. But especially when it comes to CAs, always leave on a good note. Don't burn your bridges because in case if your financials are right, then it is okay. Otherwise, you might get into trouble because they know what has been wrong in the business. So that way, yeah, always leave on a good note when it comes to CAs. Yeah.
Okay.
What
And
percentage?
can you explain what bootstrapping is?
Yeah, bootstrapping is that you're putting in your money, right?
Okay.
Yeah.
Fine.
Jayashri says, what percentage should be held as cash reserve? Jayashri, you should always have a 6 months run rate. Your bank should have, if you are dependent that, if I can exactly put into perspective, you can't be hand to mouth in business. If you don't have 6 months run rate, you will die. Even with 6 months, you could die. I always say it has to be like from 9 months to 12 months, but that is difficult in terms of at times for cash heavy businesses, especially if you're a D2C brand. So 6 months runway is what you require. There is another question which says average recurring. Okay, yeah, that's been answered.
Ma'am, could you please explain about the GST process? Do we need it, or when do we have to actually use it, get it registered?
Okay, so two things here because that should come from a CA. If you think this is your first, second, third year of operations and you are not going to cross 2 CR in business, you could do away with the GST. That is the norm that has been given by the government. If you think you are going to cross that, then I think it is important. And also, since you're doing expenses from day one, I don't see any harm. Get a GST registration done so that you get your inputs. Maybe not now, maybe after 3 months, maybe after 6 months. Get your GSTs done. Your CA can file that quarterly because you're not fitting into that slab. And as a startup, you can do it quarterly. So I highly also recommend. And the reason I'm saying that is also from a investor's perspective or a VC's perspective at a later stage, they would want your compliances to be complete. So ensure your GST is there. That is what I recommend. And there is no harm. No, there's just a small government fees that you have to apply and you have to ask your CA. As it is, the CA is charging you, they will just put it at part of your monthly. They're not going to increase the cost of their monthly charges that they do towards you.
Okay, I'm just starting, so I don't have a regular CA who actually helps me out. So that's the reason I asked.
So you have these CAs. So when you negotiate with a CA now to apply for a GST, you can apply for yourself also. But in case you were to hire somebody, just tell them that you would want a quarterly return, and they can give you a quarterly return rate for their charges for GST.
Okay.
That is
Thank
much less. Yeah. Welcome. Anybody else?
Ma'am, my accountant refuses to take the GST input, even if it's in the portal, if I cannot produce a bill of that. So can I insist him to take that, or?
That's actually a good practice because, like I mentioned, because what happens is that we have found there are times when the source, I mean, let's say
Vendor.
the vendor, yeah, in your case, the vendor may have wrongly put the GST or maybe, put double. In our case, like I told you, a startup that we found 6 months back, they had a PO was converted into a tax invoice and put up on the GST portal. So it's a good practice to actually physically see and then match it to that. If there are no discrepancies, then it's good. It's a good practice.
But sometimes we don't get that bill, like the auto person like that, they hand it over to site engineer or any other person in the site, I mean, we may miss it. So like
So then
that.
it has to come as part of his KRA. You need to have make a accounts at the rate your business kind of a mail ID. Send it out to all your vendors. Ask your CA or accountant to make the whole complete list. Put him in CC. Give him password for that mail ID. You should also have it. Ask him. Send it out to every vendor you have ever worked with. That please ensure your invoices are received on this mail ID. Otherwise, we'll not be able to look into that. So you will start getting that, and you just need to see. So even if the physical invoice is not there, it can be checked from there. Yeah. I see so many of you, and either everybody's understood, or they're good with numbers, or there is something wrong, or maybe I was all over the place. We have one more question, I think. 40 lakhs revenue if goods and 20 lakh revenue in services. Threshold limit of taking GST registration. Yes, that's right. But it's a yearly this thing for startups that they have come up with. So, but that's correct. If it's 40 lakhs for goods. But I strongly feel that, have your compliances from day one. Get Startup India registration, get MSME or SME, all those registrations in place. It will help you somewhere or the other. There are grants, there are so many other options. Bootstrapping also includes grants, by the way. You were asking that what is bootstrapping? Bootstrapping also is basically you are putting in your money, and what are the other levers that you can pull to bootstrap it further. It could be grants, it could be competitions, it could be family round. So basically you just keep, but you also know your limitation, and beyond a point, you know that how much you want to put. Don't put good money after bad money. What happens is that there are times when a business, let's say in your case, has been handed over, you don't know what is the future, or you don't know whether it's your calling. There are times, we just put, okay, you have to do this business. There's nothing else. So maybe a sell off of that or an acquisition of that. So that is why don't put good money after that, after bad money, because you've been just trying to think that, okay, maybe I'll bring it to the scale, maybe I'll sell this much and it'll get acquired for this much. The time and energy that you're putting in is also valuable, for which you may not be compensating yourself enough. So that is also important. No worries, Meera. Thank you. Yeah. Any other questions, or should we investing with your own money or taking loans with government schemes? See, if you think, first of all, it's your idea and your startup, that means you have confidence. So you should be able to put money on yourself. You should be able to bet on yourself, I think. So that is why first invest with your own money and then look for government schemes and loans. Very recent startup that I met, they're doing amazing job, and even for us. Okay, I'll give you my personal example. Even for my current brand that I have, when we launched, I was in no mind that I want to take government money and from the schemes and all that. And by the time I decided in 3 months' time, that because we just started scaling crazily, and I thought that we need more influx, and it was at a lesser rate, or it was almost at 0% interest kind of a thing. So when we reached out to them, I realized I was revenue generating. So most of the government schemes are actually for pre-revenue also. So if you are still into conceptualizing stage, or you're still thinking about the ideas, you should actually register for these grand challenges at Startup India. They're great. Schemes are concerned, loan and all that, yes, you can, because there is a the pre-seed grants are also there, but even the others, SISF things that are coming in are also for pre-revenue most of the time. And the amount is so less that 10 lakhs, 20 lakhs that they give you actually is not sufficient enough. You need to understand that if you're taking loan, you need that runway. So everybody's runway will be different. For some, 10 lakhs would be a good runway for 6 months. For some, they know that I'm spending 20 lakhs only on Meta every month. So for a D2C brand, it will be just like a peanut. And the tension of having a loan, and after 2 years, they're going to monetize and you have to start repaying, will also start. But understand the critical aspect of your business and the point it is at. don't lose out on the scaling part. That is very critical. Just by saving some money or not taking that risk might delay the success that you might get. So be that risk taker, do a full analysis of the situation. And if you can, then take that either loan or get a investor or early investor or something like that. But take that hike, because when you are on a go or when you are up, it's just a curve. Otherwise you will take double the amount to reach there. Let's say festival season is great for you. If you have to push, if for example, or for books, let's say if there's a particular season, you find that holiday season it sells better because kids are at home and mothers are pushing, or maybe something else. You need to just identify what is that peak season for you, and that is where you need to push all your money.
Ma'am, can you explain more on LTV and CAC? I don't understand what.
Okay.
I'm not.
LTV, yeah. LTV is the lifetime value of a client. So if I am with you, I get my first house made by you, and then I recommend a friend to you, and maybe after 2 years, I'm coming back. In your case, because your business is different, I'm coming back to you after 2 years saying that, hey, my son wants to get a house constructed. Why don't you make? So if you were to look at a lifetime value of a customer, which means that, broadly speaking, in a span of, let's say, 12 months, how many times have I come back to you? Yeah, how much money will I spend my money with you? So that spread over the total number of customers that you have. Okay, the lifetime value of the customer is this much. For example, in a D2C brand, that's why I said the first sales is not your sales. Your sales completes when you have your second sale. First is your zero sale, right? It's called zero sale. We understand it in that way. In LTV, you don't take the first sales because you made an effort. Now you did an advertisement, you reached out to them, you hired somebody. So all that money is already gone when you have acquired. But if you are a, let's say, shampoo brand, I'm coming to you every month on month on month. I saw the ad, I like the ad. I clicked on the ad, I went to your website, I made a purchase of $1,000. Now, next month, I received a discount coupon on 25th day saying that, hey, your bottle is about to be finished. How about you buy now and we give you 10% off? I said, okay. So this is the second time. And third time you say, hey, with our shampoo, we are giving a conditioner sample free. Would you want to try? So I again fall into trap, third month, 4th month, 5th month. So if you were to look in 12 months, maybe at an average of 1,000 rupees, I've spent 10,000 rupees with you. But you, to acquire me, that is the CAC, customer acquisition cost, was for me to see that ad and click on your website and buy was maybe 1,500. So when I bought for 1,000 rupees first time from you, you were in minus, right? But over a period of time, my LTV is 10,000 rupees spent on your website, and you have only spent 1,500. Now 1,500 plus your COGS, which is for every month, that is gone, and the free samples and the shipping, everything is there. So that calculated will be the profitability of per client, but that is my LTV, that that in an average span of, let's say, if I'm targeting, so typically for me, for my brand, I am targeting women between 40 to 55. I know out of 15 years, they will be with us for at least 1 year. In that 1 year, that could be spread over 15 years also. That could be 1 year in a go also. They spend 2,400 every time they purchase. So 2,400 into 12 is how we calculate. So roughly we know that, okay, our CAC is around, our LTV is going to be around 25,000. Now, how many will buy? You have to complete one whole cycle to understand 1 year of the business. And that is when you know that over a period of 12 months, this is what has happened. So more your LTV, the better and lucrative it is for, even from investing point of view, even from business, more profitable will you be. And then there are referrals that as a client, if I'm giving you more referrals and all that. So that's all. Yes, I see your hand there. Yes, Meera.
Hi, yeah, Meera here. First of all, my apologies. I've been traveling continuously, and as I just hit the home, I didn't realize my audio was unmuted. I was just helping my daughter to finish her homework. And
No,
my
no,
question.
you did not hear anything, believe you me. So it's okay.
Okay. All right. So I wish to understand a little more about on unit economics and customer acquisition cost, the CAC. I have a brief understanding, but then still want to get a little more from your end. It will help me.
So what business are you into?
So I run a mentoring platform known as Maya Kata. We offer offline as well as online mentoring. So our mentoring includes for the students, aspiring entrepreneurs, and early stage ventures. So typically we offer in the line of it could be building the sales funnel or the brand positioning, how to go about from the idea to an outcome. So these are the areas of mentorship which we are offering, and we work with colleagues, institutions, and we are in talks with a couple of e-cells also.
Okay.
So
So
we
in terms
started.
of, yeah, sorry, I'm cutting it. So in terms of your unit economics, for you, first you would have designed the course, is that right?
We customize it as per the need. We started with the master classes, and basis the feedback received, now we are just customizing the model. We're building like a 6 months or a 10-week. So with
So who
regards to
makes that for you?
online,
Who makes that for you?
so mine is an OPC. So I'm looking, I have interns and external consultants who help me out in terms of the designing work.
Okay.
Sorry. Yeah.
Okay.
So in the process of legal transition to a full-fledged private limited. So yeah, at the moment I'm doing it. Yeah. Along with the
Is-
college work on the calendar. I mean the curriculum.
Okay. So first of all, private limited LLP proprietorships, that is a completely different thing. That has got nothing to do with this. Private limited only if you're looking at raising funds. I think LLPs are really, really great. They are a great way to start a business and to even shut down very easy, even in MCA from that perspective. Proprietary, no way, don't do it.
No.
In case, God forbid, you get into some legal problems. I mean, from your house to jewelry, everything can be sold, not in partnership. Again, because even if it's your husband, even if it's your sister, brother, father, mother, anybody, or your friend or your son, no. Get a LLP or a private limited. Private limited, only the compliances are a bit more and more stringent, and closure takes a bit tougher, this thing, but otherwise it's fine.
Okay.
Coming back to your question of your COGS, in your case, you have to measure in terms of the number of people that you have employed vis-a-vis the number of courses that they are making. That will
Okay.
help understand, because that is the only matrix in your case. So, for example, you have 3 trainers or interns,
Yeah.
or let's say 2 interns and 1 senior person, and your mandate is for them to have 10 modules each, kind of thing. Now, for you, what is the value that is coming? Let's say if you were to have a subscription from a website for that, or they're using some tool for which you are paying, all that will come as part of COGS for you,
Okay.
because that is
Okay.
the cost of the goods. Because in your case, there's no physical this thing.
Yeah.
That would not include your marketing expense. So if we were to talk about, let's say, generally, if your course, and you would be doing a lot of these ads, right? First to get them in the funnel, that would be like a 99 or 199 kind of thing, and then
Yeah.
up,
Yeah.
right? So
Yeah.
from that thought process, your COGS would be different for each, for
Yeah.
all of them. So your COGS will be different, because you have to understand that 99 rupees, you would also add the meta cost and the Google ads cost to
Yeah.
that. So
Yeah.
that will help you understand that what is your CAC, that is your customer acquisition cost later. So maybe running a 99 rupees workshop for, let's say, enrolling 1,000 people, only 10 coming up, and out
Hmm.
of that, one converting, or maybe probability of not even one converting, is what you have to look at in terms
Okay.
of calculating that cost. But initially for you, if you can get the same manpower to do a lot more, will help you bring down the unit economics of that particular session or training. What I mean by that is, let's say if you were getting the same kind of module for, let's say, the modules will be different for college students, for entrepreneurs, for organizations, for corporate workshops, right? So
Yeah.
if
Yeah.
a person is doing more work, if you give them more work in the same kind of salary, that is where your COGS will come down, because then you can individually distribute that. That is the only way for you to distribute it and understand the real economics then. So that will
Okay.
COGS for you. Yeah. A bit tricky here because the training business, we don't understand that what exactly is coming in, but all your subscriptions and everything also could be. So there are terms like CM1, CM2, CM3 that are used these days. CM1 is basically the cost of the goods landed at your warehouse, including the transportation. So if, let's say, if again coming back to the lotions and shampoos, it's easier. So if I sell shampoos and I order to the manufacturer, the cost that it is there will be minus the GST, the cost that is there at which the vendor gives me, plus the
Okay.
transportation he is charged to me is my CM1,
Okay.
right?
Okay.
So that
Okay.
is my gross margin one. Now,
Okay.
gross margin two would include the cost of me delivering it to, let's say, you. You are a
Okay.
customer, you have ordered it. So for me, first would be the packaging that I'm selling, that is the secondary packaging,
Okay.
the delivery cost, the payment gateways, the Shopify cost, all that will be CM2.
Same. Okay. Okay.
And
Okay.
then, so that is why you would have heard terms, what is your CM1, what is your CM2, what is your gross margins. So these are just
Yeah.
confusing terms, they're just subdivided into that. CM3
Okay.
is wherein you put in your marketing cost also. So for example, a product
Okay.
sells for 100 rupees, your
Okay.
CM1 is 20 rupees landed at your warehouse. Okay, so you are left, your CM1 is 80%. Your gross margin is 80%. Your CM1 is 20 rupees only, right? Now CM2, you take another 25 rupees or 30 rupees, let's say, for understanding, ease of understanding, 30 rupees to send it to the customer and to pack it in the packaging that is there, the cost, the delivery portal will charge me, payment portal will charge me, Shopify will charge me as commission, PayU Money will charge me, or Razorpay will charge me. All that is 30 rupees. So it makes
Okay.
CM2 is 50. So that means now my CM2 in terms of percentage is also 50%, right?
Mm.
CM3, I had given an ad on Meta. You clicked on that ad. So,
Okay.
so when I gave that ad of 1,000 rupees, 20,000 people were the users and only 500 came and only 20 bought. So my CAC comes from that. Cost of acquisition comes from that, right? So that when I add to this CM2, that means that, let's say you costed me 25 rupees for you to come and buy from me. So now my CM3 is another CM2 plus CM, this one, your marketing. So now it is 75 rupees. So out of 100 rupees, 25 rupees is what I'm left with. Now these are
Yeah.
not my profits
Yeah.
because I've not deducted the salaries, the
Yeah.
rent, the GSTs from this and everything. So GST I've not calculated, so GST is not there, but my EBITDA and everything. So finally I'll be left with, let's say 10%, 15%. After 25 rupees, another 10 rupees gone. So maybe I'm left with 15 rupees. So your unit economics in that way, out of 100 rupees is just 15 rupees. So in
15.
your case, you have to see that what is your CM1, CM2, and CM3. It will just help you to identify your unit economics much better.
Okay, I'm just drawing the analogy over here. So I've made a note of it. I could see CM3 in my case would be the training delivered plus the marketing cost involved.
Only the market. The training delivered is, if it's through a platform which is costing you, let's say you have a premium version of Zoom, you could
Yeah.
just that 1 month what is the costing in that and include there. So it will come in CM3.
Variable cost and should be included, is
No,
it?
no, 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 no. So still CM3, it is no, your OPEX is not there, your CAPEX is, no, your OPEX, your rent, your salaries are not there. Till
Hmm.
CM3, it is not there. So that is how you will drive your unit economics from there.
I will write it down and find out. Only then I will.
You can reach out to me on a personal this thing. If it doesn't, we'll work on it together. Not an issue.
I would definitely. I think I made more of your this one. Thanks a bunch, Saman. Thank you so much.
Thanks. There is a question from Dr. Avasti. It says, what about medical device manufacturing? Sir, I couldn't understand the question. Could you just, it's not complete, I think, the question. Are we talking about manufacturing or understanding the COGS here or the sales? Dr. Menon, are you there?
Thank you, Tamanna. So it's already 8. So
Yep.
we can wind up the session.
Yeah, sure.
Hope it's clear for everyone. So if you have any further questions, a feedback form will be shared post the session. So you can drop your doubts there. So thank you, Tamanna, for providing valuable insights and practical tips
Pleasure.
for everyone.
And happy to connect with anyone. You can just reach out to me. You can take my number or you can pin me on LinkedIn. Happy to connect with you, sit with you again and do it. Yep.
So, as we conclude this session, we hope you will walk away with a deeper understanding of startup finance and the confidence to apply these principles on your own ventures. So, I encourage all participants to continue learning and applying these financial principles to your startups. Thank you for joining us today, and a special thanks to Tamanna Singh for sharing her expertise with us. We look forward to seeing you in our future sessions as we continue to support and empower women entrepreneurs. And
Thank you.
also a special mention to Atisha for clearing the doubts of other participants in the chat section. So, and also lastly, I want to acknowledge that it's currently 8:07 p.m. and I appreciate everyone's dedication in attending the session despite the late hour. Your
Yes.
commitment speaks volumes about your passion for learning and entrepreneurship. Thank you for being here. And also, participants, do mark your calendars. Our next session will be on Saturday, February 10th, starting at 11:30. We'll be exploring the topic of curating customer experiences. It's going to be a great session. So you won't want to miss it. So stay inspired, stay innovative, and keep pursuing your business aspirations. Until next time, take care and keep thriving. Thank
Bye.
you.